Hello, everyone. My name is Dominic DiMaria. I'm an agent with Porcupine Real Estate, and I'm joined here today by Chris Nato from Lakeview Mortgage. Hello, Chris.
Hey, Dominic, how are you?
Great. So we are doing another one of our financing FAQ videos, and today we are going to talk about the difference between seller financing and assumable mortgages. Chris, where do you want to start?
I guess I should start by saying both are unrealistic expectations to get.
Okay.
Seller financing is basically what it sounds like. You're relying on the seller to hold a mortgage and have you pay the seller, the terms of that mortgage. So while this does happen, it's definitely not common because most sellers want to get their lump sum of money from the sale of the house versus, getting in a monthly payment. Assumable mortgages sound fantastic. However, I've never seen one actually pan out. And the reason is, so how it works is, let's say, so the benefit of an assumable mortgage is someone has a low interest rate and the interest rates are higher now, and the new person comes in and they want to assume the existing mortgage at the existing interest rate and term and everything. So that's fantastic. The problem is when you have a shift in values, like the market we're in now. So if someone bought a house for $400,000 at 4% interest rate, and that house is $500,000 now, with a much higher interest rate, you would have to come to the closing table with the difference of what that person owes on their current mortgage with what the sale price is of the home. And since most assumable mortgages are just FHA or VA, government-backed loans, basically, these are loans with zero to very little money down. So most people that are doing it don't have the $50,000, $100,000, $300,000 for an additional down payment.
Okay. And then seller financing, I've heard that it's only really applicable when somebody owns their property outright.
Definitely.
So in this market, not many people own their property completely outright. So it's harder to find. I very rarely see them come up. If somebody does have a seller financing option available in their listing, is that something that you have any part of, or is that something that they would handle on their own, or with my help, obviously?
Definitely with your help. With me, it would just be if my terms would be better than the seller's terms, but generally, no, I wouldn't get involved in that. It would only be if they wanted to do traditional financing versus a seller financing. Or once they got into seller financing, say 6 months, 3 years down the road or whatever, the seller wants their money back, then they would come to see me to refinance, to pay off that seller financed loan.
Okay, so if somebody did get into a situation where they did have a seller financing situation that fell through or just changed, they weren't happy with how it was going, they could come to a traditional mortgage place like
Yes.
Mortgage, talk with you and fix it all for them.
Exactly, 100%. Yeah, we would refinance it just like we would any other mortgage.
Great. That's really all I have. If anybody has specific questions, they can reach out to you. How is the best way to get in touch with you, Chris?
Definitely phone 603-582-5626. Thank you.
Thank you. Great to talk with you again. And again, my name is Dominic DiMaria, Porcupine Real Estate. If you have any questions about any of these topics or anything else, please feel free to reach out to me.
Have a great day. Thank you.
Thanks.